Investor behavior changes. One of the biggest transformations brought by gold ETFs is how investors actually behave. Before ETFs, adding gold to a portfolio was complicated and slow. But with the introduction of products like GLD, everything changed almost overnight. Portfolio managers could now add gold exposure in seconds. Instead of dealing with physical delivery or specialized contracts, they could simply buy shares. This made gold a practical and flexible tool for diversification. As a result, gold started appearing more frequently in modern portfolios. It was no longer reserved for extreme scenarios or long-term storage. Instead, it became something investors could actively manage, increasing or decreasing exposure depending on market conditions. This shift fundamentally changed how gold was perceived, from a static store of value to a dynamic financial asset. Global examples. We can see this change clearly through real-world examples. In financial centers like Zurich, institutional investors began using ETFs tactically. During times of uncertainty, they could quickly increase their gold exposure and just as quickly reduce it when conditions stabilized. This ability to rebalance rapidly became especially valuable during financial crises. Instead of being locked into physical holdings, investors gained flexibility and speed. Across the globe, similar patterns emerged. ETFs allowed investors to react in real time, making gold part of active portfolio management rather than a passive holding. Retail adoption. The impact wasn't limited to institutions. Retail investors also embraced this new approach. Individuals who previously found gold investing too complicated now had a simple entry point. For example, many began using products like GLDM for regular monthly investments. This introduced a disciplined, long-term strategy similar to investing in stocks or index funds. At the same time, some investors combined ETFs with physical gold. They used ETFs for flexibility and liquidity, while holding coins or bars as a long-term reserve. This hybrid approach reflects a more sophisticated understanding of gold, using different tools for different purposes.